All right, welcome back to the channel. A lot to unpack, a lot to talk about. Thanks again for stopping by this week. We are going to be chatting a little bit about what we see, our opinions on tariffs, the Canadian economy, and more importantly, how this is going to play out into mortgage rates, ultimately what's happening here in Canada. So I want to share our thoughts and opinions this week. If you're a mortgage holder, you're approaching mortgage, or you're looking to buy, you won't want to miss it. Once again, thanks for stopping by. If you have not subscribed to the channel, we encourage you to subscribe to the channel, hit that notification bell. Don't forget to share, like the video. It does help the YouTube algorithm. More importantly, let us know your thoughts, questions, and concerns in the comment section below. Helps us formulate conversations for our next video. So once again, right now, most Canadians, unless you're living under a rock, you fully understand the volatility that is happening right now between Canada, the US, and Mexico, Europe, right across the globe, even with China. All of these conversations right now are around tariffs. What is going to happen? The uncertainty is literally what is driving fear, not only in the stock market, but ultimately amongst Canadians, creating a lot of anxiety of what the future holds for Canadians as Donald Trump and his administration continue to dangle this carrot of tariffs over all of us here in Canada. And ultimately, what does this mean moving forward? As we've discussed in previous episodes, we talked about, last week, we expected the Donald Trump administration to, put a pause on it till at least April 2nd. That ended up being sort of true. What ended up happening was he put the tariffs into effect on March 4th, then quickly went to make some concessions, especially in the automotive sector. He delayed it another 30 days as they can sort of get a better comprehensive understanding of how this integrated trade between Ontario and obviously the auto manufacturers in Michigan, Detroit, ultimately how these play out as the union heads from the three major automobile manufacturers sort of stepped in. Literally, this is the big conversation right now. I mean, we are uncertain of if these actual tariffs are going to be implied on Canada and Mexico, or if it's just a tactic by Donald Trump to sort of get his wants and needs fulfilled. A lot of conversation around, yes, the Canadian border, fentanyl, seizures, what's happening with Canada spending 1.3 billion, putting more troops, helicopters, so on and so forth. Obviously a big reduction in fentanyl crossing, illegal immigration. This is really the big question, but ultimately you have to position that against what Donald Trump had sort of argued in his State of the Union address, where he wants to build the U.S. economy. That means bringing more manufacturing into the United States, which he is getting from companies like Apple, TSMC, the semiconductor, major semiconductor company in Taiwan. Ultimately, that is huge news for the U.S. because obviously we can't function without semiconductors, chips, which run and operate the entire world. These are super important components in all technology. And if we understand that Donald Trump wants to create, the United States as the AI leader, the crypto leader, the economic powerhouse that, he wants it to be, then, he's going to bring in a lot of business. He's going to incentivize those businesses. Ultimately, we have those reciprocal tariffs that are going to be potentially being implied or imposed on April 2nd. That's tariff for tariff. If you tariff the US, they'll tariff you back. Ultimately, right now, there's a lot of conversation on if it's likely to proceed, especially between Canada and the US. Ultimately, with China and other countries, we'll have to wait and see what exactly plays out. But ultimately, all this uncertainty is a major problem. Now, I said it once, I'll say it again. With Donald Trump, I firmly believe he is a president. If we look back at his previous administration back in 2018, he talked about tariffs, not to the same extent that he's talking about right now. Remember, tariffs, one of his favorite words. But ultimately, he's going to wield his power. I think he's going to bend the stick, maybe not break it. He will be looking at the entire economy. He doesn't want the economy to collapse on his watch. So if we were to take that, you can make your own conclusions on what that could mean. Ultimately, obviously he wants to benefit the American people, the American, his voters, right? Those who, voted for him to come into office and fix all the problems. So we'll have to see if that's a short-term pain for long-term gain. But ultimately, what this does for Canada is puts us in a position right now where we're trying to scramble, especially as we have weak leadership from the current Liberal administration, as we look to who's going to be running the show for the Liberals, then heading into an election. This is literally the question. We saw Trudeau and Trump sort of exchange words for 50-minute call just on Wednesday with regards to what's happening. He tweeted, good luck on the election. We don't really get much out of Donald Trump. So he's holding the cards very close to the chest, not letting people know what he's thinking or what he wants to do. And this is creating a lot of pandemonium. So as we look to the Canadian side, on this side of the border, ultimately this is going to play into growth. This is going to play into jobs. This is going to play into businesses either moving from Canada to the US. We saw this sort of happening right now. We also have to take into consideration capital investment from new businesses that want to build, especially in the automotive sector. If you're a car manufacturer in other parts of the world, you're going to want to come to Canada, you're going to want to go to the US. And obviously, that's going to divert a lot of money, a lot of capital into the US as opposed to here in Canada. And we need that capital. We need a lot of resources here, especially as Canada faces its own set of problems when it comes to interprovincial trade, the barriers, which hopefully will get resolved very quickly. What this is really doing, I think, is building and bolstering a more Canadian-centric ideology when it comes to business and allowing us to sort of manufacture and produce our own goods here in Canada rather than have to depend on the U.S. And at the end of the day, I believe this will be a winning formula. Maybe not today. A lot of pain, short-term pain, long-term gain. But ultimately, let me know your thoughts on that. With all that being said, we have to look at the Bank of Canada's next rate announcement. That's on March 12th. And ultimately, the data that's come out over the last little while isn't really conducive to a Bank of Canada rate cut. Although I do believe, enter the caveat, I do believe the Bank of Canada will cut because of the fears of these potential tariffs. We don't know how they're going to play out, if it's going to be the full 25%, if it's going to be cut back. Once again, maybe mimicking what happened in 2018. We'll see exactly how that plays out. But once again, the Bank of Canada got GDP data for the last quarter of 2024 coming in a lot hotter than expected, which is potentially good news, right? Growth coming in higher than forecasted is a good sign. I think it was at Bank of Canada forecast 1.8, came in at 2.4, 2.6. But ultimately, that could be an anomaly. It could be a one-time print on that because of the fact that when Donald Trump got elected, we have to understand that we knew, or the markets knew, the economy knew that he was going to dabble with these tariffs. So that could have led a lot of companies, a lot of businesses to import, export at higher volumes in that short window in order to escape these potential tariffs that were impending, right? So that's definitely also playing out very much so in the consumer sentiment. I know a lot of people that, including myself, right? When we heard about these tariffs coming in potentially in February, if you are an individual that wants to enjoy U.S. wine or U.S. Alcohol, for example, right? What Doug Ford's been talking about, bourbon. Ontario is a big buyer. The LC was a big buyer of that. If they're going to take it off the shelves, you're going to want to stock up a little bit on it. Imagine across the board, across Canada, on all goods that are coming from the U.S., cars, for example. So a lot of maybe people front running that. We'll see exactly how the numbers play out. But at the end of the day, if these tariffs do come in, right, if they come in and they are for a prolonged period of time, it's going to wreak havoc on the Canadian economy. Less businesses are going to grow. The less businesses are going to hire. They're actually going to scale back. Less money being invested in research and development. The story can basically be played out, especially for those companies that deal a lot. One of their major, exporter is the United States. The major consumer is in the U.S. Maybe not so much for local Canadian businesses that depend on B2B within Canada, but ultimately those that are exporting to the United States are going to get hit very, very hard. So with all that, ultimately we are uncertain, right? We don't know exactly where things are headed over the past several weeks and months. We've looked at the bond market. We continue to see the 5-year Bank of Canada bond. That is the barometer for where fixed rate mortgages are sort of pinged at, right? So if we start to look at that, we saw them sort of fall off with the potential for the tariffs. Once we started to hear, hey, there's a potential that we could likely see some conversation, they ticked back up a little bit. What this means is I do believe that eventually we will see these particular 5-year fixed, 3-year fixed come down in price. We talked about it on a previous episode where we did a mortgage rate update. We'll be doing another one probably pretty shortly once we sort of get some stability. The key word is stability, right? The banks, before they start to really make those changes, those monumental moves to their fixed rate mortgages, they need to make sure that those bonds are going to stay relatively low so that they can price their margins, their profits, so on and so forth. That is really the question. I'm not saying that they're not going to do it. They will once all the banks sort of see, hey, we're at this particular level. Now's the time to move forward. No bank, no major bank wants to go up and down with their rates. It's really annoying. It's frustrating to not only their clients but to everyone who is renewing a mortgage, especially with those 1.2 million mortgages that are up for renewal, and the banks that want to be competitive to try to keep those clients. Remember, it's always cheaper to keep an existing client than to acquire a new one, but a lot of banks are coming online to try to fight for that business. Now, that's obviously around the fixed rate component in the variable rate market, where if you're looking at the variable rate understanding, obviously, number one, if you are in a variable rate mortgage, over the course of the last few rate reductions that we saw from the Bank of Canada, um, that your mortgage potentially, if it's a static or adjustable rate mortgage, you would have seen either your amortization come down or you would have seen your payments get reduced. Obviously, there's a lot of conversation right now around this mortgage renewals, the renewal shock. It is a real conversation. It is something that is super important, especially for those individuals that may have purchased a home at the 2020. If you bought a home prior to that and you've been paying down at a really low rate, what we're seeing right now is a lot of clients getting renewals that they had a mortgage around the mid twos, high twos, and maybe now you're going to be renewing into very high threes, low fours, right? So there is a little bit of a shock there. A lot of Canadians can absorb that. We're obviously having this conversation. You're saying, Anth, well, what about mortgage delinquencies? Yes, we have got reports from Equifax, and we've seen that delinquency rates on mortgages, those 90-day arrears, have ticked up slightly. I think it's around 0.22. Ultimately, still below the pandemic levels, way below where we saw in the great financial crisis in 2008. I think the last statistics was about 11,000 mortgages were missed the payment or within that 90-day window. But when you look about through Canada, obviously there's about 5 to 6 million mortgages in Canada. 11,000 is a very small number. Not to say that that is to discount the fact that there's problems, right? There could be some potential problems, but Canadians are pretty resilient when it comes to paying their mortgages. They unfortunately will look at using lines of credit cards, beg, borrowing, and stealing for them to come up with those mortgage payments. A lot of problems with these delinquencies are also that we're noticing. Once again, when clients are coming up for renewal, and this is sort of bringing us into the next layer of the conversation. And if you are in the situation with a mortgage renewal coming up in the next 3, 6, or 12, potentially 12 months, as all these mortgages renew in 2025, 2026, you have to really understand what you want to do with that mortgage. A lot of our clients have incurred some debt over the course of the pandemic. A lot of the conversations we're having with clients, their families have grown, right? They've had children. We call them the pandemic babies sort of thing. And as their family grows, not only have they, one person's gone off work, maybe they're not getting the full income that they previously had been earning. Maybe they got a pay increase, but one person's off. More mouths to feed, less income coming in, that leads them to maybe leverage their lines of credits or credit cards to make ends meet. Obviously, most Canadians we talk to, it's not a consensus, it's just an observation. But most people don't want to change their quality of life, right? Once you're living high on the hog, as they say, you don't want to sort of pull down, and that creates its own set of problems and challenges. Obviously trying to balance that budget. So when clients are coming in for renewal, we're finding not a lot of them are just going in for a straight renewal. They're like, Anth, we want to maybe figure out how we can save some money. Remember, getting a low interest rate is great, but do you want to save money? Because sometimes when you get that interest rate on the renewal, right, it might be significantly lower or substantially lower than maybe looking at refinancing your existing mortgage, because once again, you're just renewing your mortgage on a 25 or 20 year or 18, whatever it is that you're renewing at, as opposed to maybe restructuring, paying off some of those high interest rate credit cards, lines of credit, so on and so forth, and maybe recycling back up to a 30-year amortization. You might be saying, Anth, well, that's a lot of interest. Yes, it is. But for a lot of Canadians, they're looking at their day to day, their paycheck to paycheck, and they're looking about how much they can save. So interest versus saving money every single month. Once again, once that mortgage comes up for renewal in either 3 or 5 years, you can always reassess your situation and re-amortize back down to a lower figure if your income or your financial situation has changed. Right now, I think a lot of people are in this particular situation, and for those viewers and those clients that were getting questions about buying and selling, We talked about it on one of our videos just a few weeks back, talking about what happened to a client. And I think I can't stress this enough. If you're going out there because you're needing to make a move right now, you need to purchase a home, your family's growing, maybe your family, your parents are downsizing, maybe they're moving in. So many different reasons why people are buying and selling, even in this market. I know there's a lot of comments and questions in the YouTube channel. Why would you be buying right now? Well, once again, the market doesn't wait for anybody. It's just ultimately we're not going to see as many people that are FOMOing into the real estate market as it is people that actually need to make a move. Need versus want, right? A lot of people need to make the move. They just need more space. They just don't have it where they are right now. Ultimately, so many different scenarios. But if you're in the process right now of buying and selling, obviously consult with your real estate professional. Most importantly, understand your budget. We talked about this. I can't stress it enough in this market, especially when home listings are up. Potentially prices haven't really moved too much according to the data. At the end of the day, you don't want your home sitting on the market. You don't need, if you need to sell it for a certain amount and you don't get it and you already bought something, how are you going to cover the shortfall? Once again, this is all part of the pre-approval process when you're working with a mortgage professional. It should be across the board, but unfortunately it's not. We see a lot of times where clients get stuck in a pickle when they don't do things properly or they just trust the wrong people. So if you have any questions, obviously you can reach out to us or your mortgage professional. Make sure you're asking the right questions. Get another set of eyes on that particular pre-approval. Trust me, it's worth the extra time. It's worth the extra effort to make sure that you and your family can keep thousands of dollars in your pocket and avoid a lot of stress. There's a lot of stress already and anxiety with all these tariffs. You don't need more if you're in the middle of trying to renegotiate your mortgage. But I will leave the video here. I will ask everyone to make sure you subscribe to the channel. Leave your thoughts and questions and comments in the comment section below. But until next week, thanks for stopping by.